What's good, boys and girls? Welcome back to another video. I've been getting a lot of questions recently, whether it's on Instagram, TikTok, Discord, or even on YouTube, on where to set your break-even points and your stop losses. It's a lot more simple than you guys may think. So I do have live examples of trades I've took, and then I've drawn out a few examples for our break-even points. Keep in mind, everyone does trade a little bit differently, so this can vary depending on who your mentor is, so on and so forth. But everything I have is pretty common. Just keep in mind this applies to the strategy I use and how I trade. But overall, most traders do trade like this. So without further ado, let's get right into it. Where to set your stop losses, right? So we want to set our stop losses at areas that will invalidate your trade ideas. So you don't just want to put them at random points of interest in the market. You want to put them at exact pinpoint locations that will invalidate your trade ideas. So then you have to calculate your risk depending on how much you want to risk. So the most common area I like to set my stop losses at swing highs or swing lows. Just like most trader, they like to put them at highs or lows. Number 2 is going to be above or below opening of lower time frame candles. So I like to do this when the swing high or swing low is just way too much. So I like to risk anywhere from like 15 points to like 35 points. So if my stop loss is anywhere, and this is going on NASDAQ, I don't trade ES, but if my stop loss is anywhere higher than like 30 to like 35 points, I'll look for the opening of lower time frame candles. And again, I'll show you guys examples of this if it is a little confusing. The third place I like to put my stop losses is above or below lower time frame order blocks. So again, if the swing highs or swing lows is just way too many points, I would like to put them at any order block on the 1 through 3 minute or any fair value gaps, right? So if we have like a 1 minute fair value gap that's unfilled, I'll put it at below that fair value gap just in case price wants to come down, tap into that, and then we can continue higher. And then the very last place, and I don't really use this much often, but say we just get a giant wick down, right? And our entry point ends up being like, let's say we get an entry point like right here, and this is just a giant wick. I'll like to put it at like CE of the wick and then target anything up here. So it all varies, but I would like to say the most common one I do use is at swing highs or swing lows, or at the above or below the opening of the lower time frame candles. So with that being said, let's jump into live examples of trades I actually took, and I can show you guys examples of 1 through 4 right now. I actually forward tested this trade on Friday, October 24th. I did not take it just because I like to take the highest time frame inversion in the leg, and we got the close all the way up here. So I did set a limit order right here. However, if you guys did take these lower time frame inversions down here, this covers 2 examples. So let's say we took this 1 minute inversion of this fair value gap right here, right? Oh, give me 1 second. Say we took this 1 minute inversion, right? And we don't want our stop losses all the way to swing low down here. Why? Because that's 38 points. That's just a lot of risk, so on and so forth. And let's say we are targeting these data highs up here, right? So if we don't want this much of risk, well, we can put it at the opening of the candle right here, right? That is take profit number 1. And this, if I did take this 1 minute inversion, that is where I would want to put it. Or if I was waiting for all these fair value gaps to get inversed and I didn't enter until this candle right here, say my entry is this candle right here, and let's see how there is a unfilled 1 minute fair value gap right here. Well, oh, give me 1 second. Then I can just go ahead and put it right below this 1 minute gap, which will give me a 32 point stop loss, and I still have a 1-to-1 on this trade. Moving on over to example number 2. This example is going to show us putting our stop losses at the swing low or the SMT low. So after coming in and tapping into this 15 minute fair value gap when we rejected it, we ended up coming back down, creating an SMT with these internal lows right here. As you guys see, ES ended up taking them out. We entered off of a 1 minute inversion, and then you guys see how there is no unfilled lower time frame fair value gaps right here or any lower time frame order blocks. So the next best option would be to put it at the swing low, and then we can go break even at the 5 minute. We'll go over that in a second once we go over our break even points, and then we can just aim for a slight 1-to-1. It wouldn't make sense to put your guys' stop losses anywhere in here just because price can come down, rebalance this leg up, come and hit equilibrium of this leg, which I believe it did. Yeah, we came down, hit equilibrium, and then we continued higher. Since there was an SMT at this low should be protected. So that means if price came down and revisited this area one more time, then our trade idea was most likely invalid and price will just continue to rumble on down probably towards these lows, and then maybe we can see a reaction from there. So moving on to our final example, and this is going to be putting it at CE of a wick, and typically the wicks are on either the 5-minute time frame or higher, and this is really my last resort to play stop losses. I like to do 1 through 3 most often. Like I said, swing highs or swing lows are the most common, but let's say we entered off both of these 5-minute inversions, and we do have a unfilled 5-minute right here, so price can come down. It has the opportunity to come down and tap into this and continue higher. But if you are not confident enough in that and you think it's going to come a little lower, well, then we can scale up to the 15-minute and see how there is just a giant wick right here. Well, we can go ahead and mark that out. Okay. Let's do something like this. I'll go style, middle line, and then we can go ahead and put it at CE of the wick. And if we do CE of the wick, then we can aim for this high up here and we can have basically a 1-to-1 RR on this trade. So now that we know where to set our stop losses, let's move on over to our break-even points. So where should we set our break-even points? Areas of possible reversal that might invalidate our trade idea. Okay, so number one is always going to be internal/intermediate highs or lows. If you guys don't know what an intermediate high or low is, it's just a higher low inside of a fair value gap. Moving on over to number two, it's going to be unfilled 3 minutes, 5 minutes, or 15-minute fair value gaps. Typically, it's just going to be a unfilled 3-minute or maybe even a 5-minute. I like to use 5-minute and 15 minutes most of the time as take profit areas if they do give me a decent RR. But if the draw on liquidity is higher and I'm not worried about these gaps, then I will go break even at them and I will target external liquidity. And the very last one is once price hits a 1-to-1. So since my strat is a low RR high win rate, I tend to take profits at a 1-to-1. So once price will hit a 1-to-1, let's say my draw on liquidity is like a let's call it a 283, right? If I have a 2.83 RR, I'll go break even at a 1-to-1. I'll take partials off and then I will let the rest of the trade ride. That's just the way I trade. Like I said, everyone does trade different, but I do have examples down here. So let's go over the one all the way on the left first, right? So say we come up and we create our external high up here. We come down, we tap into a high time frame PD array, but we don't find an entry and we end up filling this 15-minute fair value gap right here, okay? Once we hit the 15-minute bearish fair value gap, we then come down, resweep out this low right here, creating an SMT, and then we do find an entry with an inversion. We go ahead and enter off the inversion, and our external target, because we are overall bullish on the day, right? Our external or our TP is going to be this external target up here, okay? Where should we go break even at? Well, we should go break even at this internal high right here, which is also an intermediate high. Why? Because price can easily just come back up, sweep this out, and then it could continue lower if it wants, right? We never exactly know what price wants to do. So that's why we should always go break even at internal or intermediate highs. All right, so moving on over to this example in the middle, our 1-to-1 example. Not many people trade like this. I like to do it because it's better on my psychology. And like I said, I do trade a low RR high win rate strategy. And this is typically last resort, right? If we don't have any intermediate highs or lows, internal highs or lows, or like any unfilled gaps, then this is like my last resort. I will just resort to the 1-to-1 break even. But let's say we do come up and we create our external high, we come down and then we just start trending higher, but we don't find an entry. But when we trend higher, we end up creating a 15-minute fair value gap. And then let's say we come down, we tap into the 15-minute fair value gap. Hypothetically, let's say we create an SMT, ES comes down and takes out these lows. And then we do get an entry with an inversion fair value gap. TP1 would be these internal highs right here, right? For a 1-to-2 RR essentially. And then TP2 can be all the way up here for a 1-to-338 RR. But if those are my two take profit areas, like I said, my strategy is a low RR high win rate. So this is a what if scenario. This doesn't happen often, but sometimes it does, right? Sometimes my draw is higher on the day and I'm confident, so I will go ahead and take this. I will then just go break even at the 1-to-1. Why? Well, because it's just better for my psychology, right? Not many people trade like this. I'm just showing you guys the way I trade. So yeah, there is our 1-to-1 example. And then lastly, our unfilled gap example. So again, let's say we come up, let's create our external high. We tap into our high time frame PD array. We then retrace without finding an entry. And then we come down and start generating liquidity on the way down. And on the way down, we create, let's say, an unfilled fair value gap right here. Okay, so that is going to be our break-even point, which is also an internal high. Okay, we come down, create an SMT, we then find an entry right here. We can then go break even either at the internal high or once price hits this unfilled gap right here, which is going to be the exact same area. And then we can go ahead and target our TP1, which can then be our final TP. Or if we are extremely confident, we can go up and tap our hold runners to our TP2. Most of the time I will just take profits right here, and this will probably be my final take profit. But like I said, sometimes I do like to hold runners towards external liquidity. So if I do so, I will take profits at these unfilled gaps, which is also the internal high, and then I will just leave runners higher. So I hope this video helped you guys out. That'll be all. If you guys have any questions, comments, concerns, go ahead, leave them in the comments. I see every single comment, so I will go ahead and reply. If you guys are looking to up your allocation, check out Lucid Trades. Link is in the description. Use code LoeGpa. 35% off right now. No activation fee. It is like $75 for a 50k account. Super cheap. Payout rules are great. Trading rules are also great. Go ahead, check that out, and I will catch y'all boys in the next one.